Hello everybody, welcome back. Let's get stuck straight in there, shall we? So today's the day of the CPI. What's it going to be? Higher, lower, or exactly on point? Nobody knows. Nobody actually has a clue, but I can tell you the best, well, I say the best, I mean what I do is I generally look at oil prices. Whatever oil prices do, CPI seems to generally follow. So oil has been in a general consolidation since the peak over here back in June 2022. And it's just a series of lower highs, lower lows, really, especially now, where we really actually look like we're breaking down. I don't think we're breaking down here, by the way. It looks like we are, and we actually are, to be fair. Lots of bullish divergence. It's a video for another day. I'm bullish on oil over the next few months. I'm just going to put it to you now. But, yeah, the CPI usually follows oil, and it's a lagger. So CPI data is not data that was compiled as of the last 15-minute candle body. So over the last 4 to 6 weeks really. So for the last 4 to 6 weeks it's been a straight downtrend. So I do expect CPI to come through either on point or favourable. What is it that they're expecting today? Core inflation of 3.2. Is that what it is? Inflation rate 2.6. Okay. I don't know if it would be 2.6, but anyway, we'll have to wait and find out, won't we? If inflation, I hate all this silly nonsense really, but if the CPI comes through as expected or lower, it should give a pump in the market. So that pump being from anywhere or of any of the charts from where they are at the time to what I would suggest, and what I was saying on the Patreon stream last night, to the next major level of resistance, and then maybe a slam back down again. Because recognize this for what it is, right? What is the CPI? What is it? What's it all about? The whole point is that if inflation comes down to 2% or 2.5, I suppose, it is acceptable enough, I think, for the Fed. The idea is that they're going to lower rates, and people are going to borrow. They're going to borrow money and throw it into the market, throw it into everything. Borrow. That's the whole point of this. That is that's why everybody's so, excited and fearful about CPI these days, or have been for the last 18 months. That's what it's all about. But when a CPI comes through, all it does is gauge it stimulates an emotional response from the market, we'll say, right? And that's all it is. It's an emotional response. It's that people have an educated guess that it's going to be good, and the reality is that nothing has actually really changed. Inflation being whether it's 2.6 like they're hoping, or 3, or even 2, it's still inflation. Doesn't mean prices are coming down. I said it a few videos ago. Prices are never coming down again. That's mad to assume that. Inflation coming down just means that things are inflating at a slower speed. They're still inflating, still going up. And no one's brought inflation down when inflation's still going up at 2.6 or 3% or whatever. So to lower rates, in my opinion, just off the back of an inflation report of 2.6, we'll say, is not the right thing to do. Because you will cause inflation with lower rates, as they did throughout the whole money printing business. So I don't think there is enough to assume a rate cut even this year. People were saying, even me, assuming a rate cut could have been possible at the beginning of this year. Then we're thinking maybe in the middle of the year. Then we were thinking, okay, maybe in Q4, which is basically where we are right now. Well, no one really bloody knows, do they? That's the whole point. No one has a clue. So markets will respond, positively with green candles on the back of CPI being lower or on point, and I think that's what's going to happen. And so what we should really be thinking about is, if that is, that's my expectation. It doesn't mean it has to happen. That's my expectation of what's going to happen today. But let me just draw out for you what my expectation actually does look like. So let's just say we got the CPI print just now, okay? And this is where we are, 56,005. We're going to go, boom, up. Maybe hit that incoming death cross, which is your 200 exponential, 50 simple, 50 exponential. Move up into that, and then bang. Why would that happen? Well, because nothing's actually changed. There hasn't been a rate cut. Nobody's borrowing anything. It's just an expected move, an excitement move. 6% up and then probably back down again. I am not a perma bull. I am not a perma bear. But it wouldn't be unreasonable to imagine a move up by 6% or maybe even higher. Maybe you move into the lower 60s and then reject from there. The reason I'm saying that isn't because I'm a bear. I'm just saying that because there's lots of resistance above us. If we look at what happened yesterday and the day before, the 21 exponential hit us, hit price action and got rejected from it. So, that's fine. That is honestly fine. That we use a 21 exponential in the same way that you would use a Bollinger Band in a way. So it's just like the center of a Bollinger Band being the 20 moving average, 21 exponential, you could use that as an exponential Bollinger Band center if you like. The rule being you're 65% more likely to remain below it if you're below it. And the inverse is the case if you're above it. So you're more likely to remain above it. So at the moment we're below that. We're below the 20, we're below the 200, the 50 simple, the 50 exponential, the 200 exponential. We're below all of it. So with that, we should expect a 65% chance of a rejection when coming up to it, just like we saw 1, 2, 3 days in a row. And that was just the 21 exponential. We haven't even hit the 20 simple. So I'm not, like I say, I'm not trying to urinate on the parade here. I'm just saying, statistically more likely to get rejected from it. So we'll wait for that move. We don't know if it will happen. I think that that's the most likely scenario. And invalidations, this is what we always want to hear about. Invalidation of that would be to clear these moving averages, which is basically 60,000. 60,000 has a free reign to move all the way up to 64,000, which has a reign all the way up to 68,000, which is all still part of your nice and tasty, nice and reliable consolidation trend line. Maybe we do that. Maybe we come down again. Maybe we break down, maybe we break out. At this very moment in time, there's evidence either way. The one that I like in the case of the bulls is this. It's your classic bullish divergence read on the money flow index. I like that. That is one of my favourites. Second to that is this, which is your total 2 on the weekly, which again is also one of my favourites, hitting your 200 weekly moving average. A golden cross after here. So there's your golden cross, there's your golden cross retest, offering a good opportunity for those who'd like to try and catch a knife, which is basically what it is. You're trying to catch a knife for the long term. That's a weekly candle knife catching scenario. Supports hold, supports break. Resistance is hold, resistance is break. And so the weekly gives a decent projection for, well, we'll just say continuation from this point forward. Giving us the idea potentially that the low is in, but the daily says we're still consolidating with a view to only get rejected at the center of a range, which if we're talking the 20 moving average is 58,700, talking about the golden cross it's 59,500, and then all these other resistances above us. If you really want to go down to the smaller time frames, we've got death crosses on 4 hourlies where we haven't quite yet retested those areas, and that's just short, or they're around the $59,000 zone. So, look, sometimes on days like today, you just have to hold your hands up and say, look, there's an unpredictable event, although I like to try and make an assumption of to what it's going to do. There's an unpredictable event about to take place. It's going to cause an emotional response in the market. Whether it's warranted or not, it will cause an effect. Sometimes a dump and a pump, sometimes a pump and a dump, sometimes a pump and a continuation, sometimes a pump and a dump, and then a pump and a continuation. Because the emotional aspect of what's going to take place today will be reflected in price action. So it isn't really a time to bet the farm on any particular direction, because emotions are what's going to get in the way of reality, So I'm just going to put it to you now. But normally the best thing to do, and this is why I've explained the higher term timeframes on Total 2 and Bitcoin, normally the best thing to do is to look at the weekly, because in 2, 3, 4 weeks from now, there's a good chance that we will actually be higher anyway, based on its own merit. evidence for perhaps a bottom being in. Even if that bottom gets retested this week, maybe even a wick lower, still would read with that bullish divergence on Bitcoin's money flow index and that 200 simple moving average on the weekly for total too. So those are sort of like bottoming, not signals, but evidence for bottoming, right, on the weekly. And again, if we just transport ourselves 4 weeks in the future and then look back, it will be clearer then, because you'll be like, oh yeah, of course, those are the sort of things we look for, isn't it? Golden cross retests and on higher term time frames, and bullish divergence on money flow index has always found the lows for Bitcoin in bear markets and even in panic sell crashes like the March crash 2020. So it will be clearer then, and the reason it'll be clearer is because obviously Captain Hindsight is a perfect trader, but also you forget actually the events that were going on at the time which lead to uncertainty, like CPI and FOMC. All those things, they were erased from the charts at that point, and all you've got is a clear, crisp chart that gives you obvious setups that were present at the time, but our judgment was clouded by events that were taking place. So I think that is probably the most useful thing we can do, is look at the weekly. And when you're looking at the weekly, it makes it harder, almost not impossible, but it makes it harder to successfully take futures positions out, because there's so much that can take place on a 15-minute chart that can't be accounted for when you look at a rock steady weekly chart, for instance. So I think we are closer to the bottom, if not already seen the bottom, than not. That doesn't mean that the bottom can't go lower. Obviously, if we break out and below this area of this consolidation formation, then it does get particularly nasty and it heads down towards 40 and below. So recognise that for what it's worth, but today will be an emotional day, full of emotional traders getting emotional, and with those emotions, it's probably best to remove yourself from that. Have an educated guess as to what's going to happen, which I think will be a pump and then I suppose a dump, or just say a pump to an area and then consolidate from there. And over the next few days from today, leading towards the end of the week, we'll probably know a bit more about what price action wants to do once this event is out the way, and the markets have settled back down to what we like the best, which is the technicals. So, long story short, I think that we're going to get a pump on CPI, whether we dump straight away afterwards or hit a resistance and cool down. Remember, the daily is still technically bearish. Even the 4 hourly is technically bearish until we've reclaimed 59,500. The weekly is obviously still bearish until we've reclaimed 62,700. So all of these areas are fair game for a pump into today and a rejection from today. Just like this big move that came down into the 40s, moved into the Bollinger Band itself, the centre of that Bollinger Band, and then back down again, perfectly down to the bottom of the trend line. So we're looking for emotions on the charts today. That's what we're looking for. All aspects of the chart give resistances where those rejections could take place. And if we break through those resistances, we go to the top of the trend line. And at that point, we hope that we break and go to new all-time highs. So all eyes on the chart and wait and see what CPI can bring. It'll bring some volatility, I can guarantee you that. Right, I'll leave it with you there. Nothing really more to say. If you want to join the Patreon, links in the description below. Alternatively, hopefully, just have a nice day and take it easy.